Hello Maverick Traders, happy weekend. This is Rob Reinhold and we are jumping into another episode of The Trading Room. Let's get ready for the week ahead. In this session, we're going to go through the previous news and what happened this week. We'll take a look at the broad markets. And then what we always like to do is we like to forget about everything we know and take a look at the charts and just do everything off of technical analysis. What is going on in the charts? We'll score everything from a +3 to a -3 from the market to all the sectors, and then we'll find the right trades in the right sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
So last week we saw some new all-time highs. Now that was a little bit surprising to me. I actually said last week that we had a nice bounce on last Friday, and I said, hey, we'll probably trade up this week, but I didn't see that we had the emphasis, the energy to make a new all-time high. Well, the market never listens to me, and on Wednesday it broke out and had a close at a new all-time high. However, I will have to say that there was not much gas behind that breakout on Thursday and Friday. We'll take a look at the charts. We got a big report on Friday. We'll talk about that in the payrolls report. And up until then, the bonds were selling off all week because we had a little bit softer data and everyone was starting to get excited about a imminent Fed rate cut. And then on Friday, the employment report came out and everything turned around. We saw the dollar jump, we saw bonds jump, we saw gold fall, and it was just, again, the stock market held in there pretty well. But other than that, it just was soft after that breakout on Wednesday. And then crypto was having a big run this week, along with AMC and GameStop, and everything was like party time until Friday when it literally all just fell apart. I mean, GameStop got hammered, AMC got hammered, all the cryptos pulled back quite a bit. So look, this is telling us the market still wants to go higher, but it's not going to be clean. It's not going to be easy. It's going to be messy. Let's take a look at some of the economic news we got. On Monday, we got the ISM report, and the ISM report was a little soft. You can see the number was 48.7. They were looking for closer to 50. Prices slipped. And then on Tuesday, we got the JOLTS job openings, and they were a lot softer than expected. So everyone was starting to think, okay, the Fed is going to be able to cut because we got cuts from the Bank of Canada this week, and we also got cuts from the European Central Bank this week. So other countries and other places around the world are cutting interest rates. We got this week ADP report, and then this ISM services number came out, and it was strong. And the market liked that. The market liked that because it was a little bit soft on Monday, Tuesday because the economic news was getting soft. This was the news that really broke us out higher. And then on Friday, we got the jobs report, and it was a little bit too hot. It was too good. And the real number here that I think is the bad number is not the jobs created, but the average hourly earnings. That was higher than expected. That is an inflationary number. And all of a sudden, we saw the odds of a rate cut drop precipitously over the next couple of Fed meetings to where we're now, again, for the July meeting, there is no expectation, like I think 7 or 8%. And then now out to the September meeting, I think it's like 40% chance. The bond market had to reprice itself because it was starting to get a little bit optimistic about a rate cut. So overall, the economic news was there was some softness, but there's still some inflationary pressures out there. So what did the market do with all this information? Well, it really depends on what index you were looking at. If you looked at the Dow, you could see that it didn't do anything. Okay, Dow was flat. S&P was up 1.3%. The Qs up 2.8%. That looks amazing. The Russell absolutely hammered. I cannot tell you the last time I saw almost a 6% differential between weekly returns in the market. Oil got hit, gold got hit. So this is where this is tricky in this market. The headline indices are looking strong, but as I've pointed out in some of my videos, the underlying is weak. It's soggy underneath. And here is a chart of the S&P. We got that nice breakout, and then look, there's not a lot of energy behind it. And we're going to see that there's not a lot of participation in these runs. These runs are really from the big cap tech. Same thing here. We've got a breakout, and there just is not a lot of energy behind it. Now look, I don't want to come on here and say things to where it makes you feel like I'm bearish. I am absolutely not bearish in any way, shape, or form. It's just a matter of, am I wildly bullish or am I moderately bullish? Or maybe even mildly bullish. That's what we're talking about here. The chart is at a +3. The chart's at a +3, but I want to show you just what's going on under the surface, just so we can moderate our bullishness a little bit. Here is the weekly heat map. And you can see where all the green was. All the green was right here. It's all right there. If you were to take out this block, which as you could see is about 50% of the market, if not more, look at the rest of the market. That's not a great week. That's sick. And we had some pretty intense selling in both energy and utilities, who have been a real leader lately. This is not a wide participation market. This is a very narrow market. And underneath the surface, I'm going to keep using the term, it's soggy. Everything underneath this, the headline numbers, very, very soggy. So let's talk about my market outlook for the week. I've got bullish, but with not much energy. And the average stock is mostly just in neutral here. So if you're not in the large cap tech, if you're not in large cap communication services, most stocks have been flat to down. If you've been in small caps, they've just been almost straight down. It's been really, really ugly. This week is Fed meeting week. On Wednesday, we've got the Fed meeting. And look, expect some volatility. Ultimately, no one is expecting a rate cut. No one is expecting a rate hike. It's all on their guidance going forward. And I think that the market kind of corrected a little bit, because remember, it's always about what you get in an economic report versus the expectations going into a report. If the numbers meet the expectations, there's typically not much of a movement. It's when the number doesn't meet the expectations is when you get big movements. And I think earlier this week, there was expectations for a more dovish Fed, and I think we're not going to get that. I think we're going to get a Fed that's saying the same things, where they like where it's going, but they're not ready to cut yet because they still see some inflationary pressures. Now, every so often, we get major reports stacked up against each other, and this is one of those. Look, the Fed meets every 6 weeks, and then the CPI is on the third Wednesday of the month. Every so often, they're on the same day. So look, Wednesday is going to be dynamite. Wednesday, you're going to get a big move in the morning off of the futures, and then it's probably going to be very dead until the Fed's fund rate come out, and then there's going to be a move off of that. So I'm looking at this week thinking Monday, Tuesday look dead. Why would anyone take any positions? This June, again, the first part of June is a little bit, lower volatility and volume anyway with the summer holiday. And then you get this big burst of energy on Wednesday, and then you can see here there's not a whole lot after it. I don't think this PPI is going to matter whatsoever, with two major things right ahead of it. This is a week that I think Monday, Tuesday are boring, Thursday and Friday are boring, and Wednesday is up 1.5% to 2% or down 1.5% to 2%. It's a tough market to trade. It's a tough market to trade. This is why we like basket trading. This is why we say, hey, why don't we throw out some trades of some shorter dated stuff, some longer dated stuff, some long, some short, to where we can manage this volatility. But if you are like 100% long, Wednesday is going to be a very, very intense day. If you're 100% short, Wednesday is going to be a very intense day. That's just how this market is. And then I think after that, we go back to the large cap tech stocks probably go higher. Everything else underneath is soggy. So we're at a +3. That's just what it is, +3. Let's take a look at the sectors, and we'll score everything from +3 to -3. And if we take a look at the sectors, it's telling you the same thing. I mean, look at this. The S&P was up 1.3%. The NASDAQ was up almost 3%. And we had sectors that were just awful. Awful. 4% down in utilities. Now, utilities has just been a rock star, and it got hit. It definitely got hit. We'll have to wait and see what happens with utilities off this bounce. Materials and energy got hit. Industrials down 1%. And then you've got the happy side. We got the healthcare, comm services, and tech. The one in here that is the most interesting to me is consumer. Consumer had been the weakest sector over the last couple of weeks, and it joined the strong sectors, and we got a pretty decent upgrade in consumer this week. So let's take a look at all of these sectors and score them from +3 to -3. We are between the 20 and 50. They have flattened out. This is a 0. So utilities went from a +3 to a 0. We're just going to have to wait and see what happens with utilities. Does it bounce back or does it continue to weaken? Comm services had a great week. Had a fantastic week. I mean, this is as bullish as it can get. Okay, Friday had a little bit of a pullback, but big deal. Big deal. We could pull all the way back down here and be perfectly fine technically. So comm services is just a flat out buy. Real estate, in between the moving averages are flat. That's a 0. It's a 0. It's just non-directional at this point. Come over here to healthcare. Healthcare was pretty strong. Look at that. 5 up days in this market. That's a +2. So that is an upgrade in healthcare. Healthcare has been moving higher. It is knocking on this resistance here. If it goes any higher, again, this is going to go to a +3. So healthcare is one of the sectors that has actually increased its score in the face of this market. Next, we have industrials, and it has weakened a little bit. Was it a -1? It's now at a -2. These are just not great candles. Not great candles at all when you take a look at the week we had. Coming on here to financials, between the moving averages, that's a 0. It's above the 20, below the 50, or vice versa, and the moving averages are flat. It's non-directional. 0 on that one. This is the one that really came back. Now, I want to keep this in like the scope of the grand thing. Scope of everything, this has been pretty flat. Pretty flat. And there's been more periods of weakness than strength. But at this point right now, we've worked our way back up above the moving averages. We've worked our way back up into this area where there's probably going to be some resistance. This is a big jump. This went from a -2 or 3 all the way up to a +1. So I think you can start to take a look at some mild bullish stuff in the consumer sector. Tech was a +1 last week. It's a +3 this week. It's right up against resistance, trading at highs. Again, there's nothing else you can say other than tech is likely going higher. Materials, totally bad week this week. Totally bad week. It's a -1. And then take a look at energy. Energy had a really nasty week and had no bounce back whatsoever. Remember, Wednesday was a big up day in the market, not in energy. And again, you can see we did not close the week on a strong note. That gets a -3. So if we rack them and stack all these, let's take a look at what got a downgrade. A whole lot of stuff got downgraded. Utilities and real estate and healthcare. Utilities and real estate got downgraded. Energy right now is the weakest. The upgrades, consumer, healthcare, and tech. As you can see here, this is the kind of market. I actually really like these kind of markets because bulls can work, bears can work, and sideways can work. A lot of times, like in a strong bull market, everything is at +3 or +2. And any shorts you take are just drags. Same with when it's really weak. Everything is down here, and any longs you take is a drag. Now, we can really match up our trades along with our analysis. So let's take a look at our trade slots. This is where we were at the end of this week. So we had some trades drop off. Most of the trades we had drop off were the +2, -2. And this is where we're left. As you can see here, we are left fairly neutral. This is where the trade slots are at this point. We've got 3 +1s, 2 -1s, and 3 neutral trades working. This portfolio is not overly bullish at this moment, and I'm very happy about that. I don't want to be ultra bullish in this environment. I want to be leaning bullish, and that is about it. And that's what we get to do with these trade slots. is we get to decide, hey, these are the things that are available. We are at a +3. We're at a +3, and these are the slots that are available. I don't have to have 2 +3 trades. I don't have to. I'm not required to. I can, but I'm not required to. What I can't do is I can't take a -3 trade. I'm prohibited from that. But I don't have to make a trade. We have a very famous saying at Maverick. Cash is a position. Cash is a position. So looking at what possible trades we can put on, I'm going to go out and lean a little bit more bullish in some of the sectors that are showing me bullishness. So that means that I've got a +2. I'm looking to open up in comm services because our comm services trade, which was Fox, it wasn't a max gain. It was a decent gain. That rolled off. The consumer trade we had was a -2 in VFC. That ended up being a tiny, tiny small loss. I'm going to actually add a +2 here. I debated about opening up a +1 at consumer, but of all the sectors I think are likely to continue to move a little bit higher, again, we went from a -3 to a +1. The velocity is telling me, hey, a lot of people are getting back in this sector. I want to add to technology. Look, I know it's crazy. I know you look at things like NVIDIA, you take a look at all the crazy price action, and you think, how can I be bullish? How can I be overweight bullish in tech? Here's what, you know this, I know this. It took me a couple of years to really learn this. The trends last longer than you think, and they go further than you think they will. Just think about every time you've said, oh, that's over, that trend's over. You were rarely right. They always end at some point, but you were rarely right. So this is what we're going to add. We're going to add 3 moderately bullish trades, and I'm going to add my -2 onto Majostra's. That's a -2 in that sector. So let's go take a look at some potential trades in those sectors specifically for those scores.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
First up is comm services. Remember, you have a lot of control over your trades. Once you make a trade, you have no control. The market has all the control, and you've got your position management in, and you can try. Look, I meet a lot of people that try to make a decision every day of what to do with their trades. The market messes with them mentally. You have to have solid position management. So you have control of everything before the trade. I'm looking at this market, I'm looking at comm services, and I see stuff just so crazy high. You don't have to buy that stuff. And actually, I don't really want to chase after that stuff. I don't have to. I can choose a slot. I can choose whether I want it to be a +2, a +2, or +3. And then I can take a look and say, hey, I'm going to find something that looks like it's just about to start a run, not at the end of a run. And that's what I've done here with Liberty Media. Liberty Media was in a solid downtrend for a very, very, very long time. And you can see we finally bottomed out. We had a big volume day here. Maybe there was some news. I don't care what it is. And you can see we've now worked our way out of some pretty serious resistance right at 18. We've got moving averages that have crossed and going higher. And we've got candles that are really good looking candles. Take a look at this. These are good candles, especially when you take a look at them versus the market. The markets were basically flat or down a little bit on Friday. You can see this one almost closed at its high. So we're going to be doing a +2 trade. So for me, this is going to be the June 21st, 1750, 20 bull call spread. We're going to be looking from 1750 up to 20. All right, there is no other strikes available. Look, there's 250 strikes, so there is no +1 available. If you wanted to do a +1 on this one, you just can't do it. You just can't do it. You're going to have to look somewhere else. There's other trades in the comm services sector. Just go find one of those. Remember, you get to pick your volatility. You get to pick how crazy your stocks are. You get to pick everything. So if you don't love the market, then just pick lower volatility stocks. It's very, very simple. You don't have to trade NVIDIA. You don't have to trade Netflix. You don't have to. You can go down the risk curve and play something else. Right, our -2 we wanted to put on was in the industrial sector, and this is Spirit Aerosystems. This stock looks terrible. It had a big run. This stock was really weak last year, and then it had a big tear, like from 15 all the way up to 36. I mean, it was a huge run. And then you can see it's just been falling since then in the face of a bull market. Remember, we've been in a bull market for March, April, May, and this thing, not at all. And look at that breakdown. That is just a beautiful, beautiful low base breakdown. We just have to decide how you want to play it. If you're looking to be a -1, I think the June 21st, 29.50, 30.50 bear put spread. We're looking to be a -2. That's the slot we've decided to fill, so this is the trade. The June 28th, 31.29 bear put spread. So again, we're looking for this to go down to 29. That's going to be where we need it to close under for our max gain. So 31.29 right there. So that's going to be about 50-50, 1-to-1 on the delta. All right, next on to consumer. All right, consumer, we want it to be bullish. And look, if you just want to do a +1, that's great. Or you don't even like it, you don't even like the sector, you don't have to do anything. Came across International Paper. These are the kind of stocks I love. I love high bases. These are definitely my favorite patterns, high bases, because it just tells such a great story. Yes, it's a chart pattern, but when you really look at this stock had an earnings report here. And since then, it has been 95% up days. And this is not an exciting stock. This is International Paper. This is about as boring as you can get. This is Dunder Mifflin style trades. It's gone from 33 up to 46. That's like a 35% gain. So this stock usually doesn't move like this. And after that huge run, when it finally cools off, no one's selling. It's tired. There's no question, it's tired. But no one's selling. I love high bases because what happens is they hang on, and then they break out. When do they break out? Look, they break out when they break out. One of the things that helps them break out is this 20-period moving average come up and push on it. And we can see it break out after it pushes on it. But I love high bases because you can get into these and wait. You can get into these and wait very, very comfortably. So you could get in with this diagonal call spread. I mean, this diagonal call spread is just a waiting game. If it just hangs out in this range, you're super happy. You are super happy if it hangs out here in the diagonal call spread. You're also good if you are in a positive theta vertical spread. This is a positive theta trade. So if it hangs out in this area, if it goes sideways, you're going to be making a little money off of theta decay. So if you want to do +1, I like this one, but I'm going to do a +2. I want to be a little bit more bullish here in the consumer sector. So I'm looking to open this up a bit. And when things are in a high base, I like to give myself time. That's the biggest thing. I have no idea how long it's going to stay in this range. So I want to give myself time. Now I usually go out to 3 weeks on my long ones, maybe 4 weeks at the most. But I'm looking at this 44, 48. That's what I'm looking at. So 48 is going to be that upper range. If it closes above 48 in 3 weeks, then that's going to be a very, very nice trade to the upside. And last, technology. Now, if you notice, I'm only doing 4 trades this week. Remember, you don't have to fill all your slots. There's a Fed meeting. I don't love the market conditions right now. I could just fill some of them. I could fill 2 slots if I wanted. I could fill no slots if I wanted. Remember, cash is a position. But I do want to add to technology a little bit, and I wanted to find something, again, that isn't like crazy having a huge run. I want to find something that's likely to continue to move higher over the next couple of weeks. I'm not looking for a NVIDIA that's already torn up 25, 30%. I'm looking at Western Digital here. So Western Digital, just a really nice ascending triangle pattern here. And like I said, this 20-period moving average, a lot of times this is the thing that pushes it out. You can see it's acting as support, and at some point it's going to push it out and hopefully make it run. I'm going to be doing a +2, which means I want to do some time, and I want to go out to 40 delta. So 74.78. That's going to be the trade. You can see that's a very reasonable trade in 3 weeks of time. If you want to go a little bit more bullish, then you go something like a 77.80. That's going to be even more bullish here on a +3. And if you want to be less bullish, hey, look, just do a bullish spread, but one that is theta positive. If you want to share some other trades with our traders, go onto the Maverick Trading website, log in, go to the forum. We always love to see talk and cooperation here with all of our traders. Let's go ahead and wrap this up. The broad market is mildly bullish. Big cap tech is more bullish, but also much more susceptible to pullbacks. The rest of the market is, I'm going to keep using the term soggy. I think that's the right term for it. It's not a disaster. It's not horrible. It's just soggy. It's just having a hard time really getting to go anywhere. A lot of times, this is a hard market to trade in if you are very directional. If you are a very directional trader where you need things to go from 50 to 55 to 60, this is a very difficult market for you. If you are a basket trader like we do here, and you're like, hey, you know what? I got some sideways, I've got some mild bulls, I got some moderate bulls. You know what? As long as you're in the right sectors, you're going to do just fine in these markets. Remember the FOMC meeting on Wednesday. Expect some volatility. I would not be surprised if that is a up 1 to 2% or down 1 to 2% day. Will not surprise me at all. And of course, look at the sectors. The sectors are telling you where your trade should be. We had some movement here. We had some strong sectors like utilities. I know I got hit with some of my utility trades. Those trades looked really good until this week, and then they went from winners to losers, and that's just what happens sometimes. So we had some weak sectors that got stronger. Look, let's just make adjustments. Let's just make some new trades and allocate the capital in the right places. Everyone have a great weekend. Take care. Goodbye, everyone.